How would notes fit in to your family legacy? Stay tuned. Well, hello and welcome to this week's edition of Note School TV, where every Wednesday, yes, every Wednesday at 11:05 Central Time, we bring you the most amazing content in the note business. So, guys, we do, as always, have an amazing guest today. This lady is really sharp, and we'll bring her on in just a minute. But before we do, a couple things. Number one, we would love for you to like what you see. So just like it. And then also, if you have not already done so, make sure and subscribe to our Note School TV channel. And then finally, make sure and hit that bell notification. Yes, if you haven't done it previously, hit that bell notification so that you will know when we go live every Wednesday when? Yep, it's 11:05 Central Time. So, also, you guys, thanks so much for all of the great questions and all of the great comments that you were sending in to us. Keep those coming. And guys, if you do want to know more about what we do at Note School, and actually you want to learn how to, well, we teach people how to close more deals. Right? So if you want more information, simply go to noteschool.com/TV. Again, noteschool.com/TV. And we will make sure and get back with you however you would prefer that we do that. So guys, again, thanks so much for being here. And as we do every week at this time, well, here's the news. So the big news, folks, over the last week, everybody has been talking about it since, well, last Wednesday when the after the Fed met. And so, yeah, interest rates went up by 0.5 point. And, well, I've got a couple of things that I want to read here, and then we're going to talk about this chart here in just a second. But the big deal is the central bank officials announced plans to start shrinking 9 trillion with the T, asset portfolio, another step to tighten policy and to lower inflation. So interestingly enough, last week, Chairman Powell, Jerome Powell, says an additional 0.5 point increase could be right warranted in June and July, given the current economic conditions. He goes on to say that, and we understand the hardship it is causing, and we're moving expeditiously, right, to bring it down. This is pretty strong words here, folks. He says, we have both the tools we need and the resolve that it will take to restore price stabilization. So they're pretty strong in this commitment to bring down inflation. And the other part of that is, well, officials will allow up to $30 billion in treasury bonds and $17.5 billion in mortgage bonds to roll off the books in June, July, and August, and then they are going to double that for the rest of the year, meaning $60 billion in treasuries and $35 billion in mortgage bonds throughout the end of the year. What does that mean? Well, it means these maturing bonds, well, they'll roll off the books and off the balance sheet, and that money will not be put back into the economy. So the other part of that is they're pulling that money out of the system. A few months, well, last year it was, put a lot of money into the system, and now, of course, it's taking it back out. And by the way, this chart that we have here in front of you, I just wanted to make a quick note. And what was really going on here is that the Fed, Chairman Powell had said that we would not really have a Fed funds rate of 2%. Well, I thought I had a different ink there, of 2% until December of this year. And now he is talking about having a 2% Fed funds rate by July of this year. So you can see over the past from 2000, back in 2001, Fed funds rate was 6.5. It drops way down, goes back up, and so it's just typical of what's happening. And finally, here's kind of what's going on in reality. Interest rates are continuing to rise. Housing is still going up. Property taxes are finally catching up with the rising house values in the counties, and, well, inflation. So a lot of stuff going on, folks. That is the news today, and thanks for watching. So let's introduce our Chief Visionary Officer, our founder of Note School, and just an all-around great guy, my friend, Mr. Eddie Speed. How are you today, Eddie?
I'm good, Joe. How are you?
I'm doing great. A lot going on in the world today.
Yeah, I was with a friend, very seasoned guy in the business, and we kind of laughed and concluded. I said, when you get it all figured out, would you let me know?
Yeah.
I think the rate thing is obviously in motion, and it's as the Fed chairman said, it's their resolve, and yeah. I think we can expect it. Our guest today, we're going to talk about family legacy, and we're going to talk about one of the reasons that she entered the market of notes is because of its ability to be so successful in inflationary times, high rates. So we're gonna have a fun time with that. So, Joe, we will see you here in a little bit.
Sounds good. You guys have fun, and I'll be right here in the background.
All right. So I want to introduce our guest today. She is from California. She's actually she's on a trip right now, which is cool because that's what this life is supposed to be about. But to not just work all the time, right? But no, she's from California. She comes from a family legacy, and we're going to really dig into that, and we're going to dig into what her motivation was and her family motivation in entering the note space from a long construction and real estate background. So you guys welcome Janae Smith.
Hi, Eddie.
How are you?
Good. Thanks for having me.
Awesome. You got a great story, and it's a little bit like my story, right?
Yes.
Now I started with my father-in-law, and you started with your dad.
Yes.
But obviously, Martha, my wife, was involved in the business along the way as well, and people want legacy, right? And, when we start looking at some of the things that we can do in notes, we start realizing sometimes legacy starts out with a lot of money. Sometimes legacy starts out with a dream, right? Yep. But the thing about legacy is the first thing that I think we give somebody, if we're trying to give them legacy, is we give them some knowledge. We don't give them a bunch of money and no knowledge. And I think that's what I've kind of thought about and hearing your story about it. Your dad didn't start out giving you a lot of money. He started out giving you some experience first, right?
Right.
Talk about that.
Okay. Well, he actually transitioned out of the real estate market, single family homes, into, riding the waves of what the economy does. And he got into low-income housing. The opportunity was there. The market was right for it. There was a program that United States Rural Development had on the table, and they were looking for people capable of implementing and building from, the ground up. So in his pursuit of doing that, they began building the apartments, and I would bid them for construction cleanup at 12. And we would, take the hot plate to the little motel with mom and my brother and friends. And we had to bid it competitively. But it was really good times. I mean, as good as it can be for construction cleanup. But it really, at 12 years old, allowed me to get an understanding of how the business works without it being over my head. So I was literally ground floor on that. And as he progressed, and the project is done, and then they started a property management company, and I walked through the halls of that department. I essentially was just kind of, through osmosis, evolved, with the business as the business grew, because he was just bringing it home every day, and we were hearing about it, and we were cheering him on in the trenches of what he was doing. So that was my initial experience with it.
Well, I think, my wife, I grew up, my dad wasn't really a farmer, but he was kind of a gentleman farmer. And I grew up around livestock and working around that side of the business. And so I grew up working like you did, right? And grew up in the cattle auction barn, working hard. And my wife grew up, her family had rental properties. So, and then as our kids have come along, we've tried to like bring things that, as we said, right, if they're going to inherit something, you want them to learn to be good, responsible citizens in that process. And so that's a good life story. So you grow up, you grew up working, you saw your family business, and then where did that take you as a younger woman?
So I launched out into a few different avenues of interest. It really wasn't, the intent behind what my dad was doing was not with legacy in mind. It was not designed, with the intention that my brother and my dad has always been very good about allowing us our own interests and freedoms to do what we want to do. It just so happens that these programs, you are connected to them for 50 years. That is the agreement you make with the government. So, my brother has a cabinet company. I had my ex-husband and I had an underground company, and we had started a cabinet company early on. And then we went into single family spec building, and we were doing the underground development and subdivisions. And, that we enjoyed that. And so my focus was more in that arena than in the family business at that point. And then 2008 hit. And we, like everybody, you get kicked a little and get back up. And we did a relocation. It seemed like a good time. We could move the business. A single family home business wasn't something we wanted to pursue at that point. We were at a period with our apartments that they were coming up for rehab opportunities. And so we kind of put all of the focus in that area, working with our syndicators to essentially you're redeveloping the whole project again.
Gotcha.
And so that had, that kind of sparked some thoughts on, I have two daughters, and a 24-year-old and a 16-year-old, and my brother doesn't have kids. But it did spark a thought of, we are recommitting for another lengthy period of time, multiple decades here, and how am I going to educate my kids on this? Which by then, who cares? Are they going to care? I mean, so I really kind of, have taken my direction in everything that I'm looking at with freedom for the kids to be able to, if they want to be a part of this, to whatever extent they can be, but they also have the freedom to jump onto endeavors and pursue their own interests. And so, you really hit a chord with me when you started, when I listened to the talk about notes and legacy, because you're right, that's essentially what it is. And when you can move beyond just thinking about your life and your retirement into what that looks like for your kids' retirement, it's a game changer. I mean, it changes the decisions that you make about business across the board. And I think that, it's a more, for lack of a better word, global way of thinking. And just by planning another generation, you're gaining the benefit, because business decisions today are implemented that benefit myself, my father, his needs. He's 79 now. So his needs are different than my needs at 54 and my kids at, 24 and 16. But it's rare to find. I never expected a family business to really be something multi-generational that they would love. And I think that's still a safe assumption to have. But pulling in other like-minded businesses, such as Notes, has sparked their interest. My daughter's a realtor, and her fiance has his contractor's license. And so this piqued their interest. And while, his words, officially, he'll be my son at the end of this month, but his words were, I don't know if Notes are going to be my thing. I don't know if it's going to be my hot button, but it seems like there's a lot of different categories within Notes, and I'm bound to find something there, a direction there that I'm going to love. So, and he doesn't know what he doesn't know right now. We're all in the educational phase. Dad and I, we've done Notes, but it's been for a completely different purpose than how you utilize Notes. I mean, and your creativity with it is really intriguing with me. For me, I could sit for hours and watch you do case studies and have light bulb moment after light bulb moment. So, for that purpose, I'm getting the challenge and the fun of that part of the game. Yeah. My dad is getting a nice, very safe return. That is important to me. I mean, he's got the Great Gatsby of businesses with this particular model of multifamily housing. It has been COVID-proof, recession-proof. It's what people try to get into. And, he was just fortunate to have his business explode at the right time with that model. But I see Notes seems to be timeless also, and every bit as secure. So for him, it's an ideal direction for diversification. And
yeah, it really is. And when we come back from our little commercial, I'm going to talk about, how some ideas about what we've seen or what we experienced with our kids, and kind of folding in the idea of Notes on a part-time basis, and whether they, can they go do other things? So we'll talk about that. That's a great story, and freedom is the most important thing for them. But once again, it's funny what attracts them. We'll talk about that. So Janae, you talked about creativity. Mm-hmm. You talked about, diversification, and there's not just one way to do Notes. There's multiple ways. So we have a one-day class, and we talk about that. We kind of paint these ideas. And so our sponsor is Note School. And so we'll hear about the one-day class, and we'll be back in a second.
Well, hello, everyone. It is Brian with the teaching team here at Note School, and I'm excited that I get to be the one to invite you to the upcoming Gold in Notes class. That's right. It is a one-day deeper dive class that we call Gold in Notes because of how valuable this time spent is. This is a full day that we really get to dig into the nitty-gritty, the whole world of creative financing, not just how to acquire more deals, how to get access to more capital, how to defer a lot of the taxes for us as well as for the sellers that we're talking to, and really learn how to create your own notes. And really, once you learn how to create your own notes, this is really where we spend an entire afternoon really pulling back the curtain on what the note business is, from wholesaling notes, buying and holding performing notes to really build your wealth. I'll even show you a strategy called partials, which is by far the best wealth building tool I've ever seen in the real estate space. And we're definitely going to spend some time talking about non-performing notes, which is by far the biggest opportunity in today's marketplace, solely because of the events that have happened over the past couple of years. This is when people are not paying their mortgages, and we're going to make a lot of big money from these bad debts, and we're going to help a lot of people get a second chance. It's an absolutely fantastic day. Come spend a day really digging and discover a lot of this stuff so that you too can start building your wealth. It's a day meant to really be engaging. Bring your questions, bring your comments, bring your business problems, and we will see you there.
Welcome back. We have our friend Janae Smith, real estate investor in California, a multi-generational real estate investor. And so, Janae, my father-in-law was also an apartment guy. And he lived in a college town. So he provided essentially affordable housing for predominantly college students. And so a lot of similarities there. And so for us, for Martha and I, our kids came along, and our kids had interest, as you talked about. They had interest, Wes. Our daughter's a professional ballet dancer, right? So that's the long way from the note business. My father-in-law was also a fireman. My middle son, Wood, is a fireman and paramedic. And my youngest son was pretty deep into rodeo, and so that certainly all of those interests were way outside of the note space. But what we found is particularly when Martha would be working on buying assets, using these leveraging strategies and buying assets for the kids' accounts, they became extremely interested because it was their money.
Mm-hmm.
And these are strategies that they wouldn't necessarily get the benefit of the money today. So you're thinking, no way a teenager would have any interest in long-term thinking. But that's not what we found to be the case. Yeah. And so I would say that I as you said, you're in the learning stages. Like that's what becomes interesting, or that's what I've seen with our kids and a lot of other note school families. That deal of taking those monies. Could you, the question is for your kid, the question for them. Now, you and I know this is true, but the question for them is, could you really take $1,000 and turn it into $100,000 worth of income sometime in the future?
Right. And then they listen.
Yeah.
Listen.
Like, is that some kind of crazy trick? And of course, that's financial modeling. And we teach all that stuff and have gotten pretty good at it and stuff. And we laugh. And as you would say now, Janae, we don't know what we don't know until we know it.
Yes.
Right.
Definitely.
You are a very seasoned business person. You've done senior living. You've done apartments. You've done construction. You've been a very savvy business lady. And yet you're laughing. You say, how could I be in my 50s before I learn how to do that?
Right. I'm getting a lot of
now that you know it.
Well, accepting that it's okay for me not to know is, that it's actually very exciting. It even my dad, we have looked at a lot of things that we have changed over the last couple of years in tax planning, and we have looked at each other feeling a little like, how did we miss the boat on some of these things? I mean, they're right there. We're in a familiar industry. We should know this. But the reality is my dad specialized in his lane. You can't, the grind was happening. There wasn't a lot of freedom to look outside. And I went after my passions, and that was my lane. And so you get a little bit of tunnel vision when you're doing that. And at some point, when you are able to incorporate some things into your income that give you a little more freedom and you can step back and have a little different perspective, it opens the doors open that were already there. And also, it credit to you. You do a very good job of making what can be incredibly confusing, applicable, understandable, and even for the person that isn't, in the trenches of this business, less intimidating. And so for that, I absolutely hands down had the class that I took at a residential assisted living convention, the door was wide open at that point. My curiosity, I couldn't stop at that point. I really needed to know more about this. So, previous and even today, if you click on something about notes, it's liable to be a little dry. You may not sit through the whole thing. You're probably not completely going to understand it. Most likely they're selling their program, but you actually put a twist on it where we're actually getting to experience firsthand what you're doing. And And honestly, it's not like you're giving any secrets away, Eddie, because every time I think that it's gone as far as it can go, you just pull something else out of your hat and blow my mind with it. So for that reason, now I am stuck in this because I have to get, a little better than at some point I'm going to put together a deal that you cannot change or make better.
Well, thank you for that. I work very hard. Joe, has been with us for years and just is such a good communicator. And I've worked at it too. I mean, you can understand something, but your inability to explain it in a simple way is of no value. If you can't explain it in a way that people can follow it,
Right.
You can't transfer the knowledge. And so we work hard at that. We really do practice it a lot. I mean, like a lot. Yeah. And thank you for that. We do try to make it simple. And, I laugh and tell people sometimes, I guess we do have a pretty good reputation for being creative. And I tell people, look, you got to remember, I've probably looked at 400,000 notes, right? So you feel like it's creative, but you also just remember that, sometimes gray hair matters, right? And sometimes just experience. And you know what that's like in your life and things that you just completely sort of understand the puzzle. And we try to make it understandable. And so let's talk about notes and inflation. Mm-hmm. This has become last night. A very seasoned real estate investor, extremely seasoned real estate investor in the business, made a comment about all this rising rates and all this stuff and how people are going to have to know creative financing. Very, very, very savvy guy. And I don't respond much to Facebook, by the way, just so you know. Mm-hmm. So, I said, he basically was saying the real estate investor is going to have to learn a new game because it's not going to be the same old game that we've been playing, particularly in the last few years. We've had artificially low rates. Now rates are where they are now. And I think most people feel like they're headed up, right? We're not stopping where we are. And so, remember I entered in the note business in 1980. I mean, that's a pretty inflationary time, right?
Yes.
And so notes really do well in inflation. And I think you and your family are going to find out that for your legacy journey, that notes are going to be a really good addition to be an inflation fighter, and for a number of reasons. And this creativity that you're talking about, we're going to really then be able to you're going to be able to look at a deal differently than most people in your industry are looking at it.
And for me, that creativity it checks off the box with helping other people and to have an opportunity we are in low income housing, and it is rewarding to see people utilize it for what it's meant to be and step up in life. And they need a little help sometimes. And same thing with the senior living. And I feel like notes is very much that way, in that you can step in and these homeowners are not necessarily at the mercy of the banking system. And I think that can be a game changer, because there's a lot of people out there not qualifying. It doesn't get any easier when you're working with the banks, that deserve to have their homes and are completely responsible people. And they just need to be looked at in underwriting a little bit differently. It can be as simple as that.
Well, whether it's credit or availability of credit, because we know it's been down in the last couple of years, or whether it's rising rates, whether it's the ability to get a loan because of credit or the ability to pay a loan because of rates. And sort of the theme of Note School is close more deals, right? Mm-hmm. Those think in terms of the punchline is essentially this: seller financing fills the void that conventional lending doesn't. That's that's why you can close more deals. So, Joe Varnadore.
I got to tell you, that was this last few minutes has been fire in the bottle, guys. This was good. You two were just simpatico, right? You were right there. And Eddie, I think that Janae, she kind of threw down the gauntlet, right? Her goal, she said it. We have it here, recorded for posterity. That her goal is to bring a deal that stumps Eddie's feet.
Yes, I'm going to do it, and we'll record it.
Well, Janae, trust me, you would not be the first that brought a deal that stumped me. So I appreciate your confidence, but the more you get to know me, Janae, you're going to eventually look at me like my family, and they'll go, "He's not that smart."
Yeah, I introduced him one day as and just a really smart guy, and he goes, "Joe, I'm not really that smart."
No, I don't think I am. I think I'm seasoned, but I don't think I'm smart. So
there you go.
Okay, more times up to the bat is a valuable lesson. That's good training.
And it's the more times, and you just gotta keep on swinging, right? That's it. So,
yes.
Janae, we love what you do, and you've been on Deal Labs, and you've talked, and we just recognized, the high level at what you and your family have been doing, and we're so glad to have you and the family as part of Note School. I mean, it really means a lot to us to have folks like you and your family. Yeah, for sure.
Thank you, Joe.
Yeah,
it's fun, and I'm looking forward to the journey.
Yeah. Well, we're looking forward to having you and meeting you in person here one of these days.
Yes, I'll see you this month.
That's right. She's coming. She has an office visit in her sites, and we're excited.
4 days before my daughter's wedding. That's how much I'm liking this. I'm running out on my daughter. See you in person.
Well, if you hadn't got the planning done for that by then it's probably
right. Yeah.
We just went through a wedding as well. Eddie's been through 2 or 3 in the last several, this 4 or 5 years. So yeah, we get it, right? So,
yeah.
All right. We're so glad to have you, and so glad that you shared your story with our audience today. Stories matter; they're motivational, and I think you being a very seasoned person. Some people here are seasoned real estate investors, and they're looking for that next diversification, particularly in a changing market. And some people are saying, "Where do I start?" And so I think we see the value in how notes and creative financing and various types has a value, and we're honored to have you today. Thank you.
Absolutely.
Thanks, guys.
All right. Well, Janae, thanks again. We're going to wrap this up. So, guys, another successful episode, I would say, for sure. And this is the kind of stuff that we do at Note School. And remember, at Note School, we teach you how to close more deals. That's our goal. And as we say this time every week, we'll see you on the other side. Take care.